Hi, Professor Jerome. We are from Dynamic Success, going to present our corporate finance assignment. Let's see the analysis of financial ratio of ABC Berhad. ABC Berhad liquidity ratio reflects the ability to meet short-term obligation. The current ratio, which improved from 0.59 against 1 in 2022 to 0.71 against 1 in 2023, indicate a slightly enhancement in short-term financial stability. The quick ratio reflects liquidity without relying on inventory remained low at 0.21 against 1 in 2023, indicating potential challenge in meeting immediate obligations solely through liquid assets. However, with ratio consistently below 1, it suggests that the company's current liabilities still exceed its current assets, posing liquidity risk. Overall, while there have been marginal improvement in liquidity measures, ABC Berhad continue to face significant liquidity concerns, especially in meeting short-term debt obligation promptly. ABC Berhad activity ratios provide insights into the operational efficiency and asset management. The inventory turnover, although fluctuating, decreased from 1.95 times in 2021 to 0.94 times in 2023, indicating less frequent inventory turnover over the years. Commercially, the average collection period improved from 0.4 times in 2022 to 0.19 times in 2023, suggesting faster conversion of receivable into cash, reduction financial risk. The average payment period also decreased steadily from 0.91 days in 2021 to 0.51 days in 2023, highlighting efficient cash management practice. Despite an anomalous spike in 2023, the total asset turnover improved overall, reaching 2.05 in 2023, indicating better utilization of assets to generate revenue. The metrics collection debate ABC Berhad effect to enhance operation effectiveness and financial performance, despite some fluctuation as specified ratios.
Hi, greetings. ABC Berhad's financial leverage ratios reflect its financing structure and ability to manage debt effectively. The debt ratio notably decreased from 4.27 in 2021 to 0.67 in 2023, indicating a significant reduction in reliance on debt financing and improved solvency. However, the debt to equity ratio increased sharply from 0.17 in 2021 to 1.07 in 2023, signaling a higher proportion of debt relative to equity, which can increase financial risk and interest expenses. The times interest earn ratio fluctuated with the strong performance in 2022 in bracket 17.02, indicating ample earnings to cover interest payments, but revealing challenges in 2021 and 2023 where earnings were insufficient for this purpose. These metrics collectively highlight ABC Berhad's evolving financial leverage position, with efforts needed to stabilize earnings and manage debt levels effectively for sustained financial health. Thanks. Hi, greetings. ABC Berhad's market value ratios illustrate investor sentiment and market perception over recent years. The price to earnings ratio, while showing a slight decline from 2021 to 2023, remains notably high above 500, indicating sustained investor confidence in the company's future earnings potential despite moderating growth expectations. In contrast, the market to book ratio increased from 2.37 to 2.67 over the same period, reflecting improved market perception and higher valuation of ABC Berhad's equity compared to its book value. These ratios collectively underscore a mix of high investor expectations for future growth and strong market valuation of the company's assets, highlighting ABC Berhad's position in the competitive market landscape. Thank you.
Hi, good evening, Prof. and team members. So I will continue my presentation. ABC profitability ratio reflect in the financial performance over the recent years. The gross profit margin declined from 36.31% in 2021 to 13.92% in 2023, indicating reduced profitability in production due to higher costs or competitive pressures. Operating profit margin slightly decreased from 13.97% in 2021 to 13.55% in 2023, suggesting effective cost management but a need to monitor efficiency closely. Net profit margin also declined from 10.21% to 9.30% over the same period, highlighting decreased profitability after all expenses. Okay, for the second part is return on asset decline from 19.31% to 17.45%, indicating potential inefficiency in asset utilization despite high initial returns. Return on equity remains relatively high but shows variability, indicating strong profitability from shareholder investment. Earning per share increasing from 2.36 to 2.67, reflecting improved profitability per share and enhancing investor attractiveness. Overall, while maintaining strong profitability metric, ABC Berhad faced challenges in managing costs and optimizing asset use to sustain profitability amidst evolving marketing conditions. ABC Berhad has shown mixed financial performance across liquidity, activity, leverage, profitability, and market value ratio from 2021 to 2023. While improvement in liquidity and marketing perception reflect positive trend, challenges remain in the profitability and asset management efficiency. Effective cost management and strategic initiative will be crucial for sustained growth in and enhancing overall financial health in the future. Thank you.
Hi sir, good day to you and good day to everyone. I'm Jaykumaran Segaran. To improve ABC Berhad's financial performance in the coming year, several key recommendations are proposed. Focus should be placed in enhancing liquidity through improved cash management practices and optimizing receivable and payable cycles. Efficient inventory management, possibly through just-in-time system or advanced software, can stabilize turnover rate and reduce holding cost. Cost control measure and strategic pricing adjustment are crucial to address declining profit margin while maintaining a balanced capital structure by reducing debt reliance and exploring equity financing option will mitigate financial risk. Finally, improving operational efficiency and making strategy investment to enhance return of asset and return of equity will be essential for sustaining growth and competitiveness in the market. Thank you.
Good day to all. I'm Yagavali here. Now I'm going to present the pro forma statement of comprehensive income of Provincial Import Berhad for the financial year ended 2024. The project sales revenue for 2024 was forecast at 6 million ringgit. To determine the cost of goods sold, fixed and variable costs were considered. Fixed costs were maintained at 1 million ringgit while variable costs were derived from historical data amounting to 2.1 million ringgit, which is 35% of sales. This result in a total cost of goods sold of 3.1 million ringgit, leaving a gross profit of 2.9 million ringgit. Operating expenses were projected at 1.08 million ringgit, composed of 250,000 ringgit in fixed cost, 720,000 in variable cost, which is 12% of sales, and depreciation expenses of 110 ringgit. Subtracting operation expenses from gross profit year on operating profit of 1.82 million ringgit. Interest expenses remaining uncharged at 200,000 ringgit, leading to a net profit before taxes of 1.62 million ringgit. After applying a 40% of tax rate, taxes amount to 648,000 ringgit, resulting in a net profit after tax of 972,000 ringgit. A 40% of dividend payout led to cash dividends of 388,800 ringgit, leaving returning earnings at 583,200 ringgit. Thank you.
Hi, greetings. The pro forma balance sheet for Provincial Imports Berhad shows total assets of 4,021,000. Assets were projected based on various factors. Cash was estimated at 400,000, which was doubled from 2023. Marketable securities remain unchanged at Rm 225,000 and accounts receivable were calculated as Rm 750,000 based on historical sales data. Inventories were projected at Rm 1 million, which was doubled from a 2023 inventories amount. Net fixed assets total Rm 1,646,000 after accounting for a new Rm 356,000 computer system investment and Rm 110 depreciation expenses. Liabilities included accounts payable of Rm 840,000 based on historical ratios, taxes payable of Rm 95,000, unchanged notes payable of Rm 200,000, other current liabilities of Rm 6,000 and long-term debt remain steady at Rm 500,000. The total liabilities are 1,641,000. Stockholders' equity consists of common stock at Rm 75,000 and retained earnings totaling Rm 1,958,200 after factoring in the 2024 net profit. Retained earnings brought from the 2023 and dividends. Given that total liabilities and equities are Rm 3,674,200. Provincial Imports Berhad required external financing of Rm 346,800 to balance the projected financial statement. External financing required is the amount of additional funding that Provincial Imports Berhad need to obtain from external sources to finance its projected growth and maintain a balanced balance sheet. The additional Rm 346,800 is needed because the company's projected increase in asset due to higher sales, increased inventory and purchase of new computer system is not fully covered by the projected increase in liabilities and retained earnings. That's all from us. Thank you.